Has anything that's happened over the last week or so in terms of the sell-off changed your thinking about how to invest in this market?
Well, certainly we're watching the yield curve. Yesterday was a fairly rude awakening, but especially with the 5-year more and the flattening, the steepening was kind of in par with the economic recovery and the thought that, okay, the 10-year and the 30-year, especially the 30-year, need to go up just because the economy is recovering. But I think what spooked yesterday was the flattening and the 5-year going up 20 bips. And that scared people a little bit. But I see that more as anxiety or bondziety, perhaps, that the bond yields are going to go up a little bit. We're advising our clients that they need to be watching their bond positions because this year might be a little more similar to, say, 2013, not quite taper tantrum. We're not calling another taper tantrum. But, we need to make sure your bond positions don't bite you. So for the last few years, being long duration has certainly paid off, but we may see that where you need to understand your duration and maturity, feel comfortable with it, maybe look into a laddering strategy to offset, because the high likelihood that rates continue to truck on higher is there.
All right, so the laddering strategy is more this notion that you have to kind of go out and tier some of those maturities that you have out there, match some of those possible liabilities or obligations that you have down the line. Victoria, I'm also kind of curious whether or not you feel as though the move that we've seen in the markets right now with rates is due to inflation fears. It doesn't seem as though that's the case, and many of our guests have said that this is not runaway inflation. In fact, we're just back to levels that we saw modestly before the pandemic.
It's not runaway inflation. I think it's fears of future inflation, which is why it's so much about anxiety of the future, and also fears that the Fed may have to move faster. But actual inflation, yes, you're seeing it slightly in commodities with copper at a 10-year high, oil back to reasonable prices. But you're not actually seeing inflation to the consumer all that much. Possibly in housing, it's certainly there, but a lot of the other sectors of the market, inflation remains muted. So it's not necessarily actual inflation. I think it's more anxiety over the future still.
So, Victoria, if that's the case, then how exactly do we feel we should be investing in this marketplace right now? Are there certain places that you want to gravitate towards, stay away from? If there is a modest level of inflation down the line, not runaway, you would still want to be in some growth-oriented stocks, maybe just not technology.
Right, and we are definitely value over growth right now, and you're seeing that play out. Even though the Dow got hit yesterday, it went down about half as much as the NASDAQ. So value stocks certainly, the cyclicals with the reopening play, we still like energy. Financials should get a boost. The spreads narrowing kind of hurt them yesterday. They were up on the day, and then in midday when the 7-year auction went terribly, you saw the financials pull back. But financials have a good opportunity in a period of rising rates. I think growth is something you have to understand. It's been leadership for so long, and this rotation of value might just give you better opportunities going forward. It might just be harder for the growth stocks to continue to outperform in this market.
Now, what's the biggest risk you think out there right now? Where should you not be, besides maybe from a risk-adjusted standpoint, cryptocurrency for certain types of investors?
Yeah, I think right now you need to watch your thematic plays. I think they've been great. People have made a ton of money, but the holy trinity, per se, of the ARK funds, Bitcoin, and Tesla is very, very volatile. So I would warn people that have made that core holdings in their portfolio. Those are more thematic satellite plays, and it might bite you a little bit. We actually like Bitcoin. We think it's a good hedge. A highly correlated sector. Let's make sure we don't overweight it, and we're looking at quality stocks with good balance sheets that are going to benefit from reopening.
Shepard Smith here. Thanks for watching CNBC on YouTube.